Sige. Thanks. Thank you. How that's causing the U.S. Welcome to Money Talks. I'm Cathy Yang, your intel. Just hours left before the 90-day suspension on reciprocal tariff expires, U.S. President Trump says the EU is close to receiving a letter as he announces new tariffs on various products. Imported copper faces a 50% levy to boost U.S. production of a metal critical to vehicles, military hardware, and the power grid. New tariffs are also in line for imported semiconductor and pharmaceuticals, with Trump saying the rate for medicines could go as high as 200%.
We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Why don't you announce copper?
And we did cars. And now, today we're doing copper.
Copper and lumber. What would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%. And we'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in. They're going to be tariffed at a very, very high rate, like 200%. We'll give them a certain period of time to get their act together.
U.S. copper prices vaulted to an all-time high after Trump's announcement, jumping by 13% yesterday, Tuesday. It is the metal's biggest surge since records began in 1968. Copper is currently trading at $5.53 in after hours, down about 2.7%. Treasury Secretary Scott Bessent said the U.S. is picking up over $100 billion in tariffs so far, with the figure pushing up north of $300 billion by the end of 2025. Trump said the EU is about to receive a letter in a day or two, though he clarified it could be a deal. Sources told Reuters that the bloc is eyeing possible exemptions from the U.S. baseline levy of 10%. And here at home, Malacanang says the Philippines is in a good position in trade talks with the U.S. Palace Press Officer Claire Castro points to a prior agreement on economic cooperation as the reason for the country's favorable stance. U.S. President Trump has sent out tariff letters to 14 nations, including our neighboring countries, but no letter yet to the Philippines. When asked where Manila and Washington are in negotiations, Castro quoted Special Assistant to the President for Investment and Economic Affairs, Frederico, and one of the trade negotiators, saying there are no new updates for now, as discussions are still ongoing. The Philippines was initially assigned a 17% reciprocal tariff, but that remains suspended pending negotiations. Meanwhile, a 10% tariff is applied in the interim to most trading partners, with changes possibly taking effect by August 1st. Meralco warns of a possible electricity rate hike this July due to higher generation and transmission charges. Meralco Vice President and Head of Corporate Communications Joe Zaldarriaga says the weaker peso is driving up dollar-denominated costs from its energy suppliers. Zaldarriaga says they hope the expected increase will be mitigated by lower charges from the wholesale electricity spot market, which saw nearly 4% decline in June. Still, transmission charges may increase following higher reserve market prices compared to the previous month. Meralco, which serves over 8 million customers across Metro Manila and nearby provinces, lowered rates last month due to cheaper generation costs. Get a quick check on our own markets here. The Philippine Stock Exchange Index opens Wednesday in the green, up about 0.1% to 6,438. PSEI slightly edged higher yesterday, Tuesday, by 0.1%. Most local counters were in the red, led by mining and oil. As for the Philippine peso, it opens today weaker at 56.55 to the dollar. Peso closed yesterday stronger at 56.35 against the greenback. And 10-year government bond yields ticked up to 6.241% yesterday from the previous close of 6.23%. And with us now for more is Jasper Ondap, equity analyst of Regina Capital Development Corporation. Good to see you again. Welcome back to the program, Jasper.
Good morning, Cathy. Thank you so much for having me here.
All right, so what explains this continued resilience in risk appetites? I've been seeing higher opens and closes on the PSEI.
Yeah, for sure. Well, we have been seeing since the news when, announced by DSP Governor Remolona said that we have the room to cut more rates, up to 2 more cuts this year. And again, this pushes yields or drags yields lower, making our market more attractive to investors, right? And we've been seeing that even if the news and the global noise with the 90-day pause coming to an end, with the new letters being sent out to our neighboring countries, or all this noise and tariffs, and we just finished the Middle East tension, and we're seeing that the risk appetite is quite favorable for us. There have been investors really buying more into our market. And if we look at the fund flows since last week, the Philippines still has the least foreign institution outflows, coming at less than $1 billion, while our neighboring countries in the ASEAN is more than $2 billion already. So this puts us in a favorable spot against other emerging markets.
Yeah, but in the way of the trade letters, I mean, that's just the first wave. There could be more. So the minute we receive one, what kind of scenarios are the markets conjuring?
Yeah, for sure that this maybe at the first few news or just the first reaction might be the same with what happened in April on the Liberation Day, right? Maybe a slight pullback might happen. But since a lot of our economists, a lot of analysts have been already saying this since the beginning of the year, that the tariff impact on the Philippines is quite minimal or just mild, not as much as those who are impacted with more than 20, 30, and 40% of reciprocal tariff. The Philippines at 17%, and even with a very low exposure to US, makes it still pretty favorable. So if there may be a pullback once a ladder is sent out to the Philippines, there might be just a slight pullback that may happen in the market, but eventually, market would pick up. Maybe we're hoping at looking at the next month's report on GDP may be favorable, maybe acting as the new catalyst for the market to come up.
Well, speaking of catalysts, we're a week in, or more than a week in, into the lower transaction taxes because of CIMEPA. What impact has that had so far?
Yeah, it has certainly been a very good impact in the market, right? Before the law, I guess the last 2 weeks ago, the average daily transaction or turnover was around 5.8 billion. And last week, when the tax was cut by 50 points from 0.6 to 0.1%, we've been seeing that the average was around 8 billion. And right now, we're really seeing that at least the value turnover was rising, right? There's more players now because the break even is was quite lower. A lot of short-term players are entering the market. This is quite good for short-term players. And there's a lot of speculators now for several names or across the board. So this really have been a good impact for the market, boosting liquidity in the market.
Which names? Speculators and short term, but what about the long termers?
Yeah, I see. We're seeing now that rates, the rates have been relatively going up since last
Nag-record
month or
sila
the
gamay
last few weeks, adjusting to the rate or the yields of the bond
Nag-record
market
sila gamay sa
with
nag-chat.
the ongoing rate cuts. But for several names outside the index, there's also an upside in several consumer names or gaming names. But the short-term players are just entering in and out. But for long-term players, they're still looking at for the dividend ones, those of which names who are quite fixed income in nature, giving out more than 6% in yield. So those names are still attractive.
Okay, we'll keep those in mind then. Thank you so much, Jasper Ondap of Virginia Capital Development Corp. And you're watching Money Talks. Coming right up. The country's manufacturing output in May reaches a 10-month high. And Scott Moore of Henley and Partners will talk about the rise in high net worth individuals over the past 10 years in the country. Keep it here on One News. Here.
That's why they come to us, because they want
Got it.
options that give them
Sure.
flexibility.
I'll just say hi to our colleague in Cebu just a moment. Dale, maayong buntag sa inyong
Yeah.
tanan. Maayong buntag. Oh my
Maayong
gosh,
buntag.
it's lechon
Maayong
all
buntag.
around for breakfast. Salamat. I love the smile.
That's right.
Keep it that way. I
Okay,
just have a
sige.
guest here, ha? Mag-English muna kami, and then I'll come right to you.
Okay, sige.
And
Diba?
okay, I'll do my best with my Cebuano. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets little changed yesterday, Tuesday, following the imposition of tariffs on copper. The Dow declined by over a third of 1%. S&P 500 fell by less than a tenth of 1%, and the Nasdaq rose by less than a tenth of 1% as well. The benchmark 10-year Treasury yields ticked up to 4.415%, and gold prices settled to $3,307 per troy ounce. Stock futures pointing to a slight decline when the markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq are all down by a tenth of 1% each. And Asian markets are mostly up in the first hour of trading this Wednesday. South Korea's Kospi and Japan's Nikkei 225 are both up by about a tenth of a percent, and Australia's ASX 200 is down by 0.4%. And Low-quality jobs constituted the 1.4 million jobs created last May, says Luis Dumlao of the Ateneo School of Economics. After our conversation on this program yesterday, Dumlao sent a message saying he's had a full look at the latest employment report, and indeed, the devil's in the details. From May 2024 to May 2025, employment increased 1.424 million. Underemployment rose by 1.787 million. Hence, at net, Dumlao says all 1.424 million jobs created were low-quality jobs. Furthermore, 363,000 previously employed were downgraded to underemployed. John Paulo Rivera of the Philippine Institute of Development Studies says while headline numbers in the 2025 look better than the month before on paper, the year-on-year data tells us a more cautionary story, particularly with underemployment rising by over 1 million compared to May 2024. The unemployment rate fell to over 3.9% in May from 4.1% in April, translating to about 2.03 million individuals. This was lower than the number of unemployed persons in the same month last year at 2.11 million. Meanwhile, underemployment in May also fell to 13.1% from 14.6% in April, translating to over 6 million individuals. The Philippines saw a 32% rise in high net worth individuals over the past 10 years, says migration consultancy group Henley and Partners. That's 12,800 in total, including 70 centimillionaires, or those with at least $100 million in investable wealth, and 12 billionaires. This represents 32% growth versus a decade ago. Well, with us now for more is Scott Moore, Managing Director for Southeast Asia at Henley and Partners. Good to see you, Scott, and welcome to the program.
Thanks for having me, Kathy.
All right, so what's minting more Filipinos now as high net worth individuals?
The Philippines has shown very healthy growth within the past decade, 32% increase in individuals with net investable assets of 1 million USD and above. And this is, in fact, significantly higher than the average for the W10 countries, which are the 10 countries with the highest amount of high net worth individuals living within them.
So what's driving that? I mean, presumably we're the fastest growing economy in the ASEAN, so that counts, doesn't it?
Absolutely. When we're looking at developing economies, particularly the Philippines, there's a lot more growth than established economies in the West. So GDP growth is significantly higher.
Okay, but what about those foreign investors now wanting in? And given the global policy uncertainties that we're seeing, I'm probably seeing a bit of a shakeup in the way people think about migration and the way they move their money, their investable wealth. How is that now translating into people wanting in and out of the Philippines?
Yes. So we track where high net worth individuals are going and where they are leaving from. And when we're looking at Asia in general, the most attractive destinations for high net worth individuals would be Singapore. Other countries like Hong Kong and Thailand have net inflows. Philippines stays pretty much level in terms of high net worth migration coming in.
What about the U.S., given the uncertainty and unpredictability, if you will? And a lot of clients want that when they want to choose where they put their investable wealth and also where they want to migrate to. Has that kind of slowed or maybe, been redirected to other countries?
So actually, the United States is expected to receive the second highest amount of millionaires migrating in 2025, with an expected number of 7,500, representing a large amount of net investable assets. And what's perhaps more impressive is within the past decade, the amount of millionaires onshore in the US has increased by 78%. So the US represents the highest concentration of wealth in the world, with the highest amount of millionaires, centimillionaires, and billionaires, and of course, the most valuable companies in the world. So it will always be a draw for high net worth.
Always be a draw, despite the policy uncertainties, the to and fro in the policies.
Despite what may seem like uncertainty from the top, there's a lot of opportunity for high net worth individuals to relocate themselves and their businesses to the US, so it remains a huge draw.
Okay, what about those golden visas? Just picking up on what you said about the migration that goes on within the ASEAN, which is really robust. How attractive are we, though? I mean, we've got the Special Investors Resident Visa, the SIRV, but when we compare that with the golden visas of the likes of Singapore, maybe even Thailand, because that's getting the big draw of the migration, how do we compare?
So comparing, let's choose Thailand and Philippines because GDP is close to parity. Thailand has a very attractive investor visa, the Thailand Privilege Card. And what's so attractive is just the ease of obtaining it. You can do all of your processes overseas. So when you land at the airport in Thailand, the visa is immediately affixed to your passport, and then you can stay permanently in Thailand for the amount of time that you've bought the membership card for. Philippines, the program is attractive, but the process in getting it involves a little bit more appointments with local government agencies.
All right, so I'm hearing like it should be easier along the lines of ease of doing business, kind of a theme there, that it's a little bit more difficult for those wanting to move here rather than it is in Thailand. During the pandemic, there was a surge in the desire to go to Portugal because of the attractiveness of the residents by investment in that country. Has that gone on? And how is now that comparing with Spain? Because Spain just seized its a golden visa just about 3 months ago. That was also attractive for Filipinos.
That's right. So the Spanish Golden Visa is no longer available, and that just shows that these programs are quite delicate to politics. Now, Portugal still exists, but you can no longer invest in real estate. Now you need to choose a fund, which are still very good options. What's attractive about Portugal is it's the only residence by investment program in Europe where the family can get a citizenship without having to live full-time in the country. And citizenship is very important because this is something that your children can pass to future generations. So when we're talking about opening doors for your kids, you would want a succession investment that can be passed down to unborn future generations.
Well, what about here in Asia? Is there a sort of a Portugal kind of a setup that might be attractive if the family doesn't want to move too far?
Generally, families come to us because they don't want to leave the Philippines. They want to stay where their families and their businesses are. In Asia, the programs are more focused around residents, but there is new options on the horizon. Indonesia is launching a golden visa. Of course, Thailand has very established options. Singapore is very attractive for ultra high net worth individuals. The amount of single family offices onshore in Singapore has grown by almost 400% within the past 5 years. It's a masterclass in effective policy of attracting high net worth families.
It is, and it's a space to watch. Really interesting times. Thank you so much for
Thank you,
joining us.
Cathy.
Scott Moore of Henley and Partners. And up next, we'll take you to Talisay City, Lechon Park in Cebu City. We'll check on the prices after the lifting of the pork ban in Cebu. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Local manufacturing output rose for a second straight month in May, growing 4% year on year, its fastest pace in 10 months. The Philippine Statistics Authority says this was mainly driven by gains in food production, which rose to nearly 16% and made up nearly a fifth of the total factory output. Analysts point to strong domestic demand as the main growth driver, even as seasonally adjusted output fell and global uncertainties linger. However, they warn that Trump's extended tariff deadline and higher reciprocal levies could hurt exports and slow long-term factory activity. Still, the Philippines' relatively low tariff rates and improving trade ties with the U.S. could support production despite global headwinds. In Cebu province, the recent lifting of the ban on pork meat spurs business in the city and other provinces. One News Cebu correspondent Dale Israel joins us now from Talisay City, Lechon Park. Maayong buntag, Dale.
Yes, maayong buntag, Cathy. We are here actually at the Lechon Park in Talisay City, Cebu to check on prices after the new Cebu Governor Pamela Baricuatro lifted the ban on the entry of pork from other provinces. This comes as a welcome news among lechoneros here because some of the pigs they use here are actually from Negros Island and other nearby provinces. During the height of the African swine fever, or ASF, a strict ban on the entry of live pigs and pork from provinces were implemented in Cebu so as not to affect locally produced pork and protect the famous lechon Cebu delicacy here. The lechon and pork meat industry in Cebu is estimated to be valued at 12 billion pesos annually. The ban made prices soar last year because of limited supply available for Cebu lechon, which has often had a high demand, especially during weekends, as they will be brought to Manila and other places in the country. Now, Executive Order number 17, the governor has lifted the mandate subject to compliance with biosecurity measures. This lifted the executive order issued by former Governor Gwen Garcia, banning the transport of pork from other provinces. Now we're looking at prices between 900 pesos here at the Lolo Soy's lechon for pork meat. As compared to before, it was only around 700 to 600 pesos. For pork meat, previous prices are sold at public markets for around 360 to 400 also for uncooked meat. And after lifting of the ban, the prices is now expected to go lower. But we saw the price is still up, and it's around 900 pesos per kilo here in Talisay City. We saw a few customers already enjoying the Cebu lechon here as they welcome lower prices. But we saw still higher prices here. Back to you, Cathy.
Team ko nga nakakagutom yung background mo. Sabi nga nila the best lechon in Cebu is in Talisay, not in Negok, dahil meron ding Talisay City. But there, right where you are in Cebu City, what are the lechoneros saying? Na makakabawi ba sila bago magpasko?
Well, we saw, we talked to them a while ago, and they said na every time na weekend, ay dadami yung mga tao, customers nila. Every weekend yan. Di papaltos every weekend. So, doon sila babawi sa mga weekend.
Okay, lami judan lechon, bisag asa ka pa, masuroy-suroy sa Cebu. Dagang salamat. Del Israel, live from Talisay City in Cebu. Thank you so much. Well, before we go, the 51st Metro Manila Film Festival is officially underway with the first 4 film entries revealed during its launch. Headlining the initial batch is Vice Ganda and Nadine Lustre in Call Me Mother, Gerald Anderson with Carmina Villaruel and Zoren Legaspi in Reconnect, and Piolo Pascual in Manila's Finest. A new installment of the well-known Filipino horror anthology Shake, Rattle, and Roll is also part of the lineup. The final 4 entries will be announced on September 30. Carrying the theme, a new era for Philippine cinema, this year's festival will also see Makati hosting the Parade of Stars for the first time, with Mayor Nancy Binay pledging full support and considering discounting tickets for students and senior citizens. Reminds me we're just about 6 months away from Christmas then. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.